Time for business now. Despite the headwinds that the country has been facing in recent months, the International Monetary Fund says Kenya's growth prospects are still attainable. IMF's Deputy Head of Africa, Rodger Nord, spoke to KTN's Agina on what it will take to transform Kenya's economy.
Despite the global headwinds and local shocks such as insecurity that have hurt key sectors of the economy, Kenya's economy has remained resilient, officials at the International Monetary Fund have said.
Growth has been quite robust and poverty has been coming down.
Despite this, however, tough times lie ahead for Kenya as the country works to maintain growth momentum in the face of increased turbulence in the global financial markets.
We're now seeing a period where a number of African countries are facing serious challenges. Serious challenges from lower commodity prices, serious challenges from a slowdown and rebalancing in China. But in Africa, those countries that are exporting natural resources, those are the countries that have been most exposed. Oil exporters like Nigeria, like Angola, mineral exporters like Zambia. And that is also where the pressure on the exchange rates have been severe. Zambia in particular has seen its currency depreciate by more than 50%. But in East Africa as well, there have been pressures on exchange rates, notably in Uganda, in Kenya and in Tanzania. And I think in those countries it reflects uncertainty about whether growth will continue as robust as it has been in the past and whether the deficits, which are large, can be financed.
Kenya has been badly hit by a weaker shilling, which is down 16% since the start of the year, a fact that has inflated the cost of imports. At the same time, the high interest rates occasioned by the increase in the benchmark lending rate has slowed down credit growth.
But for growth to remain at these levels of 6–7% for the next 20 years, there will have to be structural transformation, diversification, and a move into higher value added. How to do it? I think Kenya is at the forefront in many ways on this. You need to have a good business environment, and infrastructure is part of that, but also education. You need to have a workforce that has the skills that allow these kind of new activities to develop.
The IMF remains optimistic that the country can weather the storm, particularly if the state keeps a close watch on the debt levels, which presently stand at 53% to GDP, according to the control of budget.
Kenya is at low risk of debt distress. Its level of external debt is such that it is considered to be sustainable. And that has helped. When it went to the markets last year, it was able to raise significant amount of money through the Eurobond market at very good interest rates.
Our sense is that the Kenyan authorities so far have been doing a reasonably good job on the fiscal and macro front, and that's reflected in the review of our precautionary instrument that we currently have for Kenya.
Well, it seems the biggest growth driver for African economies will come out of value addition when it comes to exports, being African countries are much more of export oriented. Focus now has been placed as well on improving accountability so as to ensure that there are no public leakages as well as wastages in different government departments. Agina reporting for KTN from Lima in Peru.